A warm welcome to an early spring morning. The sun's shining, but the traffic was pretty poor. I do apologise for me struggling to get here. Just about made it. But a warm welcome. I believe we've got some new people with us as well. So I think we'd like to, well, you chaired the last meeting. Would you like to introduce them to us, Caroline?
I can do. We all met Francis at the last meeting. I think we were all there. So lovely to see you back, Francis. But this is also David Webster. I think he was one whole point behind Francis. And we're so pleased to have you with us today. The two, as we spoke about at the last meeting, bring different but equally important things to this meeting. So welcome to the meeting. Everyone that's in here today, besides these three lovely ladies on this section, are councillors. Three ladies are all finance and audit and audit or finance. We have legal and yourselves and Anish Young? KPMG. Couldn't remember. Sorry.
Not KP Peanuts.
KPMG. So welcome everyone to the meeting.
Yeah, so we'll kick off with apologies, please.
Thank you, Chair. I've received apologies from Councillor Afsar, Councillor Hutton, Councillor Sweeney and Councillor Williams.
Right, thank you very much. The minutes of the last meeting held on the 29th of November. Caroline, I think you chaired that meeting.
Any corrections or may I sign them off? Thank you. I'll sign them.
Agenda item 4, the annual governance statement. Over to you, Lisa.
Thank you, Chair. Before you is the annual governance statement for the 23-24 set of accounts. It follows the usual standard that we've used before, outline what our governance framework is, how we assure ourselves that governance is effective within the organisation. It outlines those areas of responsibility for the key individuals from the council all the way through to employees and managers. That is on page 24 of the report. We talk about how we then evaluate that governance framework. And that is outlined within section 11 of the paper. So during the year, there are many different areas and reports that we build upon in order to be able to give you that assurance that the governance framework is effective. So that links through to the annual review of the Code of Corporate Governance. That comes annually through to members, normally in the July meeting, where you review that Code of Corporate Governance and also the action plan that's been identified through the Corporate Assurance Board to strengthen that Code of Corporate Governance. We also look at the audit report, the outturn report from the Chief Internal Auditor that gives you an independent source of assurance how effective the control environment is operating. It highlights any key risk areas and any areas for improvement, and also reports back to you the confirmation with the public sector internal audit standards. It's a key element that internal audit need to comply with those standards, and any areas of non-conformance needs to be included within that particular report. So that comes through to you also on an annual basis. We also look at the information and the opinions that are generated through the external auditors. Members obviously will recall over the last few years we've had a number of issues with regard to the outstanding accounts and then the subsequent audit opinions for a number of financial years. And at the last meeting in November, the opinions, disclaimed opinions, were issued for both 21-22 and also 22-23. A key element that's reflected within this year's, or the 23-24 annual governance statement refers to the Ofsted report that inspection was undertaken in November 23. Members may also recall, because the 22-23 annual governance was still live, so last February the Chief Executive came and talked through the actions that were being taken to address the weaknesses that were identified within the Ofsted report, and the robustness of those action plans and the evaluation of those will be contained within the 24-25 annual governance statement. That judgment was awarded was required improvement to be good, so there was some significant issues there which were also reflected within the external auditors, EY's external auditors opinion, disclaimed opinion that they brought in November. We've also looked at the complaints reports as well, because they're a good indication of where potential areas of governance failures can be identified if you're getting a significant number of complaints. Those reports went through to the various scrutiny committees in June, July, September last year, so there were no significant issues there. Also as well, we looked at the number of complaints regarding elected members, and that report came in July 24, and on page 30 there's a summary of those complaints, and there was found to be one breach of the code by one member, which was dealt with by the monitoring officer. In terms of the LGSO annual report, which comes from the Ombudsman, there were a number of issues that were highlighted regarding the need to respond to requests for information more quickly, and also to make the remedies more timely in terms of dealing with the complainants. The annual information governance report came through to members as well, and confirmed that there was compliance with the Data Protection Act 2018 and the GDPR Freedom of Information regulations, and also with regard to the Local Government Transparency Code as well, to their key requirements, and those were fine. Whistleblowing matters continue to be considered by the monitoring officer, and they're reported through to it was previously the Corporate Governance Working Group. It now is known as the Corporate Assurance Board, with effect from January 24. Compliance with the SITFA Financial Management Code via the self-assessment was undertaken and found to be no significant issues there to report. There is issues in relation to SEND with regard to the continuing demand with regard to social care and SEND transport. We've also, as well, another significant issue to report to members regarding the COVID Inquiry Working Group, National Inquiry Working Group. We've continued to support the submission of information via the LGA as part of the National COVID Call for Information. So, in terms of the actions that were identified in the 23-24 statement, they are given on page 32. Work in progress on a number of those areas, and they've been carried forward into the actions for 23-24. There was some additional guidance that was issued towards the end of 24 that talked regarding the period of which the AGS should actually cover. Previously, we've continued to report significant governance issues up to the point that it comes to this committee as part of the submission of the accounts. That SITFA guidance advocated that you focus on the year of accounts with only any significant governance issues being raised additionally. So with that in mind, I've also added within section 13 on page 37, which goes over onto page 39, AGS 12, which talks about the challenges that will be presented as a result of the December 24 white paper regarding devolution and local government review, which will continue to feature on annual governance statements going forward. So in terms of the recommendation, that's there at section 14 on page 39, states that we've got sufficient governance arrangements in place and that they've been effective with the exceptions that have been identified, and that the recommendation to the committee is that we recommend that both the Chief Executive and the Leader of the Council certify the annual governance statement as an accurate record. And I'm happy to take any questions regarding the details. Thank you, Chair.
Thank you, Lisa, for your comprehensive report. Are there any questions for Lisa? No, I think, go on then, Janice. I was just going to go past you then.
It's more of a comment, I would say, actually, than a question. I think this is a timely reminder of the extent of the work that goes into having gone through the process again, and the extent and the coverage by all of the people. So one of the questions that I will often ask, as you will probably recall, is about the engagement. Now, that's not just the engagement as us as members, it's also about the officers and all the way through the chain as well. So I think that we've got the evidence in here to say that on those big ticket items especially, Send, Ofsted, that we've had the people in the room that we need to be having those conversations with. I just hope we continue to do the same with the most recent addition to the list on devolution. Devolution is already my experience of what we're doing here. Okay, thank you.
Well, can someone approve that we, like Janice, someone second that? Colin, thank you. Everyone's in favour of that? Thank you very much. Yeah, got your approval.
Yeah,
thank
lovely.
you.
Thank you.
Right, agenda item 5 is training on the statement of the accounts, and that's Rachel. Over to you, Rachel.
Thank you. Good morning, everyone. So I have some slides to show you, and I'm really conscious that obviously the last meeting we had, we ran through the statement of accounts for the previous year, 22-23, so it's quite recent that you have seen a set of accounts. Obviously this is another year, so the numbers are different, but the principles remain the same. So don't know if I can, are the slides up? Will they come on? Okay, there we go. Sorted. So, I'm not proposing to go through in a huge amount of detail these slides because obviously we did cover them at the last meeting. So I'll just take you through the highlights and just demonstrate where things have changed in the financial statements onto 23-24. So we know that we have to produce the statement of accounts and bring them to this committee as those charged with governance for approval. So that's what we're doing here today. The accounts set out the income and expenditure for the County Council and our assets and liabilities. Obviously, we use the 31st of March as the cut-off date, so everything in the 23-24 accounts runs up to the 31st of March 2024. And we follow the appropriate accounting code when we produce the accounts. So we've had a public inspection period for the accounts, and obviously sitting alongside that there's the freedom of information legislation, which does allow members of the public to ask questions on our finances outside of that public inspection period. So we've changed auditors. As we know, we've met our colleagues from KPMG here before, and so this is the first set of accounts that they have audited for us. The format obviously remains the same. We have the narrative statements, we have the financial statements, we have all the many notes to the accounts. We also have the pension fund accounts as well included within the document. So on the financial statements, so here's where we'll see some changes from 22-23 to 23-24. So one of the changes is that we've got a small surplus at the end of this year, where it was a small deficit before. So it's not a huge change, but a small surplus is obviously slightly better than a small deficit. And if you wanted to see further explanation of how that surplus has been reached, I would direct you towards note 9 in the accounts. That's a good place to have a look at the additional detail on there. So on the balance sheet, obviously same format as usual, assets and liabilities at the top, underneath our reserves, which are split into usable and unusable. Unusable reserves are not cash, so as the name suggests, we can't actually spend it on anything. So the assets less liabilities have increased, so we've got more in the way of assets in 23-24. So this is due to some reductions in our liabilities. We've paid off some long-term borrowing that was scheduled to be done, so we have fixed rate long-term loans which sit on the balance sheet, but in 23-24 a few were scheduled to be repaid, so that's reduced that overall debt, and also the pensions liability has reduced. So that's a very hypothetical figure. The pensions liability comes to us from the actuary, and it represents the hypothetical liability should all employees start to retire at the same point and claim their pension. So it's not something that is ever going to crystallise, but it is a representation of how much money the council would owe should that happen. So, in the bottom half of the balance sheet there, we've got an increase in usable reserves. So, to match the increase in assets, we need an increase in the bottom half as well. So, usable reserves have increased a little bit there. So, just some really key numbers that sit within usable reserves. They are general balances. So, this demonstrates our financial resilience, the amount we hold in general balances. It's 48.5 million there at the 31st of March last year. Schools balances, so that is the money which belongs to schools. We can't spend it on anything else. That's sitting at 21.5 million. So the number of maintained schools that we still had at the 31st of March, that money belonged to them. And unusable reserves have also increased, but these are not cashed back, so we can't actually spend them on anything. And for more detail on the reserves, I would direct you to the movement in reserves statement. So that shows all the changes during the year around reserves. So we also focus on the future, although the accounts are obviously a retrospective document. We do have one eye to the future as well when we prepare them. So we consider whether the county council is a going concern. So at the end of March 2024, yes, the County Council was still a going concern. We're still here today. So we have to assess that, though, in terms of budgetary pressures that we can see coming forward on the horizon, and also our financial performance during the year. So we did have a small overspend in 23-24, which we funded from general balances, but we'd already planned a contribution back to balances in 24-25 to replenish that. So balances are still at a reasonable level, and we always monitor the level of general balances very closely, and that is reported on as part of the MTFS annually. So I did say that we also include the pension fund accounts within the document, so we've got those there as well for you to view. And just to reiterate the point that the cash of the pension fund is always kept completely separately from the cash of the county council. So that's what the legislation states, that's what we do. Everything is held completely separately. Pension fund produces its own annual report to give a lot more information on its investments and its performance during the year. So that's also a document that you can view online should you wish to see some more details on the pension fund. The overall headline is the value of the pension fund increased by 13.7% from 22-23 to 23-24. So that's a really good performance, and the annual report will set out all the factors that contributed to that performance. Obviously, investments are at the mercy of global economic factors, not just our own with our own internal control. But that's a good outcome for the pension fund there. So I'll stop there and just take any questions which you may have on the accounts.
Yeah, just a minor inquiry, which I generally like to have when I see the aspect of 6 weeks of consultation. Do we get any inquiries, and is our means of capturing them correct? I.e., if people make an inquiry via the website, do they actually get a response via the website controller?
So we did not receive any particular queries during the public inspection period, but we do receive numerous queries regarding financial matters via the Freedom of Information mechanism for people to contact us and ask questions. So we do answer financial questions quite frequently during the year, but in that particular 6-week period, we didn't get any questions. So my understanding is that obviously people can contact us via the phone number that will come through to the switchboard or via the website, and any queries that come in through those methods there will come through to me and my team for us to respond to. So I'm quite confident that any queries would be received and responded to if we had any.
I'd just like to say as Chairman that these information have been a long time in coming. I think it's pleasing that we've actually got this information, and it looks like it's got a healthy position. We seem to have plenty of cash in the bank, and no doubt it'll be swiped away from us. Some reorganisation that's going on nationally, but I certainly hope not. But that's my personal feeling. Anybody got any other questions? Francis, would you like to say something?
Thank you, Chairman. Thanks, Rachel. Really comprehensive and well-structured accounts. It gives a clear picture of the Council's financial health and strategic direction. I think all members agree with that. The Finance Director's narrative, especially for me, was really, really informative. It includes all the geographical area of population, key urban centres. It's really informative. I've got one question, though, which is more of a now question than the historic accounts. You talk of challenges, inflationary and demand pressure challenges. How would these affect your cost reduction plans this year? Is it really challenging, or do you think we'll be able to deliver your cost reduction plans? Because I think they're key to your performance this year.
So I think at the moment in the current financial year, we're forecasting a small underspend. So we just have the Q3 performance report went to Cabinet last week, and that reflected a small underspend. We've obviously also just set the budget for the next year, 25-26. So any pressures that have come through have been reflected in there. So inflation is less of a pressure than it was in 23-24, but still in certain services do sort of feel a pinch of that, and it is included within the MTFS and the budget for the coming year. But I would say for the current financial year, things are generally on track, and a small underspend in an organisation of this size is more or less akin to a break-even position, really. Any small variance either way is quite good to achieve, so I'm not particularly concerned.
Thank you. My second question is around the long-term loans, long-term liabilities. Is there anything to worry for the members there, or it's all under control?
So I would say that our treasury management strategy, which is part of the MTFS, that covers our borrowing, that covers the plans for our borrowing, any borrowing which we don't have any plans to borrow in the immediate future currently. But if we did have, they would be reflected in that strategy. And that sets out also the governance that we follow when we take out any loans. So we do have a number of loans that are still on the balance sheet, and you know, that total can be seen on the sitting there on the balance sheet now, £345 million. So there is still quite a lot of debt there. And some of those loans were taken out over 50-year terms, so they're not due to be repaid for another decade or so yet. But I would say it's all affordable. It's covered in our treasury management strategy and our capital strategy, where we set out our minimum revenue policy as well. So those things are presented to Cabinet and monitored during the year. So although we do have some loans, that are still due to be repaid and not for a few years yet, it's not a particular concern.
Thank you, Chairman. Yeah, it was also good to see the adaptation of IFRS 16, got all the leases on the balance sheet, which is really good. Thank you, Chairman.
Yeah, I think that Francis has actually just brought out for me the point that I think is worth making publicly as well. There is an awful lot of detail that is contained within the information in the reports. So things that I was making as a note when we were looking at the value of the assets, which you've already mentioned, was to do with the PFI leases. Further in the report, we've got line by line of each of those PFI arrangements that we've got. Going concern, I'd put notes about children's services funding. That's also addressed later on with the mitigation. I suppose my question is that sufficient? But we're looking retrospectively, and I think the answer then goes over to government as to provisions that are going to be made in the future for children's services. A question that I thought to myself I would be taking out of here, one of the other demands is children in care, recruitment and the retention issues that are around that and the costs that's being assigned to those. Now that's something that I can also then take to a corporate parenting panel and a different meeting and a different panel that I also sit on. So there's useful information throughout, but there is a consistent theme with some. And I think that when we look at either adult social care, children's services, SEND, transport, that those are things that we need to be looking at in the future as well. So we've got those items for going concerns, but I think that actually they do run as a theme all the way through. So more of a comment again. Thank you, Chair.
Yeah, so can we have a recommendation to approve the statement of accounts, please?
I'll happily approve this
Right,
statement of
seconded
accounts.
by Shanice, so everyone's happy with that? Thank you very much. Yeah, there's quite a lot here, isn't there? There's the members approve of the management letter of representation for the County Council Agenda 2 for 2023-24. Everyone happy with that as well?
Yep, happy.
Thank you.
Unanimous.
We've got to do C as well? Yeah. Crikey. And members approve the management letter for the representation of the Pension Fund, which is obviously improving, so I think that's okay to approve that. Okay with that, everybody? And members delegate authority to the Director of Finance and consultation with the Chairman to make any final amendments to the accounts as deemed necessary by the external auditors. Is everyone happy with that? Thank you.
Yep.
So just, thank you. So we're to agenda item 7 now, value for money report. This is over to Richard at KPMG. Over to you, Richard. Give us some good news, will you?
Thank you very much, Chair. Okay, so you've got I think 3 or 4 reports on the agenda here from KPMG, which are bringing to conclusion the 23-24 audit process, and Rob and I are going to take these together. I recognise you've had a flurry of reports from external auditors over recent months as they've been you've been bringing up your accounts up to date and getting those historical opinions signed off, and you know, we're pleased to be sat here today to bring the 23-24 process to a conclusion, albeit there are some caveats around the conclusions that we reach in that regards. The reports you've got on the agenda also, there's quite a significant amount of crossover between the findings and the way that they're presented, and that's because we have to put forward our conclusions in the right chronological order so that then they make their way into our subsequent opinions and the auditor's annual report, which becomes the document which communicates all our findings to members of the public. So apologies that they may feel like that there's repetition within here. It's certainly the case when you're writing these as well, that there is a lot of repetition when we're putting them forward. But yeah, they are done like this because that's the way we're told to do it. So, as I said, Rob and I will take them as a double act, and we're going to start with the value for money risk assessment. So this document effectively forms the basis of the work that we've done over the value for money element of our responsibilities for the year 1st of April 2023 to 31st of March 2024. And it very much looks at the arrangements that are in place across the authority during that period. So obviously stuff's happened since then, stuff's happened before that. You've had the reports from EY that came through, which actually touched on some of the points that we've got in here. Hopefully, as we move forward, we'll get back to that kind of reporting in clear financial years, so that it's maybe less confusing. But yeah, this very much focuses on the arrangements that are in place for that particular, the 23-24 financial year. So what our responsibilities are is to look across three, they're called domains, three areas, which are financial, sustainability, governance, and then the third one's called securing economy, efficiency and effectiveness in the use of resources. And the way we've approached this is we've asked management to put forward a summary of their arrangements that they believe operate. We've also reviewed minutes of meetings. We've held discussions with each of the service directorates, or heads of service across each of the directorates. We've looked at your policies, your publicly available documents that are on the internet, and also your internal regulations and mechanisms for recording the processes by which you operate. And we've looked across each of these three domains to determine whether there's any significant risks where we then subsequently have to go and do further work to enable us to provide that commentary to members of the public at the end of the audit process. So looking across each of these points, financial sustainability is very much focused on your arrangements for setting budgets, the process for establishing the medium-term financial strategy for the authority, and ensuring that the risks that the council faces are appropriately included within that and financially mitigated, and then taking a step back to determine whether or not that actually causes any risks to the council in terms of its future operating ability. And it very much flows into that kind of going concern assessment that Rachel's referred to within the financial statements as well. So we've looked across those arrangements, and off the back of the work that we've done, we haven't found any significant risks in relation to financial sustainability, which I think is really positive, particularly in light of the fact that you're operating in really challenging times, and obviously, you only need to open the flick onto the internet and you see stories about local authorities issuing, bankruptcy notices, Section 114 notices. So we haven't identified any issues in that regard for the period 23-24. And then in terms of governance is very much around making sure that you've got appropriate information to make decisions at a council level, and also at a directorate level on a day-to-day basis. Again, making sure that there's appropriate risk management arrangements in place, that internal audit have that appropriate place within the authority to report, that there's adequate arrangements in place around counter-fraud activity, and that similarly you've got arrangements in place to deal with complaints, and that standards are upheld. So again, we've looked across the areas of our responsibility in regards to governance, and again, we haven't identified any significant risks of weakness in the governance domain that we require to report. So that will then flow through into the auditor's report as a green messaging box. And then the final area is the effective use of securing economy, efficiency, effectiveness in your use of resources. So this is very much around looking at the way that you use benchmarking to manage activity and to drive down costs and improve quality, looking at the use of key performance indicators, partnership working, and making sure that the council's acting appropriately on a day-to-day basis to get best value out of its resources. Now, one area that we've obviously, it's been discussed a lot at this committee and also in many other forums is the Ofsted report that was issued in January 2024 off the back of their inspection in November 2023. Now that falls within the 23-24 period, and whenever there's a regulatory opinion, we need to consider it. Now, Ofsted obviously issued a required improvements and report for children's services, and therefore, from our perspective, that's indicative of arrangements not necessarily being where you would want them to be in that financial period. So off the back of that, that gives rise to a significant risk of weakness. Now, that is consistent with the message that EY presented in their report in December. They reported that in their report, despite it not falling in the year that they were looking at, but it would have been remiss for them to not, by virtue of the fact that information was in the public domain. So effectively what you've got here is a repetition of the previous messaging, albeit that we've gone on then, because of that significant risk of weakness, to perform additional work, which Rob can talk a little bit about in a moment. But what I will say at this point is we've looked at despite it being very late in the year, we've considered the response that the council made to the findings. We've looked at the arrangements to support the plan that was subsequently submitted to Ofsted. We've reviewed many minutes around improvement boards and scrutiny committees. We've held discussions with the new Director of Children's Services as well. To determine whether or not those arrangements that have taken place subsequently are appropriate. So whilst we have a significant risk of weakness, what we will conclude is that the arrangements in place are appropriate in terms of the Council's response. There'll be a recommendation in the Auditor's annual report, which Rob will talk about in a moment, but effectively it's a repetition a slight expansion of what you've had previously through this committee from the previous auditors. And that's where this report ends from a value for money perspective, because it's a risk assessment, effectively take you through to determining the work that we have then subsequently gone on to perform. And that report, those findings are reported in the next report that you've got on the agenda, which is the ISA 260. So what I'll do is I'll just pause there for a moment, if that's okay. If you've got questions on that report, then we'll go into the audit findings report on the financial statements, which helpfully also covers value for money.
Yeah, just a procedural thing for our process now. If we have this value for money report for 23-24, which as you've said is flagging up some issues in terms of non-compliance, or observations of the Ofsted reporting. If we sign this off and it says to be completed, then we're not going to see that finished off, are we? We're not going to see a finalised report. The report's indicating the section's still to be completed.
Yeah, so sorry, I didn't turn my microphone off there. So that work is complete. So it wasn't... Sorry. It wasn't complete at the time when we issued the report as the risk assessment, but that's probably right in terms of the status of that report. It comes before Rob's report where the work is now complete. So we have performed those procedures that I mentioned in terms of considering the response to findings. We've reviewed the arrangements to support the development of the plan, and we have reviewed the minutes of the improvement boards and committees to establish what management have done since the 31st of March, and we're satisfied with those responses.
So just to follow that up, are we going to see that somewhere where we can see that it's been clarified?
You'll see the conclusions in the auditor's annual report, as that will be the document that goes into the public domain. We've shared that with Section 151 officer, and the Director of Children's Services has also confirmed that she is satisfied with the recommendation that we've made in regards to value for money. We would like to issue that auditor's annual report alongside the audit opinion on at the end of this week to enable us to discharge our responsibilities. We've just got to work. I'm not sure. I have to defer to members' governance in terms of what the process would be for being able to share that report with you in terms of the formal document.
So yes, we'll be able to email that through to members once it's been received and cleared. We'll make sure that that comes through to yourselves.
I'll just make my point again. We're signing off something here where we haven't seen the conclusive report that says this is now okay.
I understand your concern in terms of the opportunity to see the finalised version, and to a great extent this is caused by the backstop date, so the backstop date is the process that has been put in place to try and bring the accounts and value for money conclusions up to date. It's unhelpfully on Friday, and so in terms of our ability to get everything to you as in a finalised format, that's what we've been up against. I don't think you need to sign off anything in regards to, you don't sign a conclusion or from an authority perspective, but you do need to receive those findings. So I imagine that this presentation would act as me communicating those findings to you, albeit that, and we will circulate that auditor's annual report prior to issuing it, would be my suggestion.
It would be helpful if there was, do you anticipate there being any significant differences from the information that you've already presented? It's just the finalisation and tying it together.
Yeah. That's right, sorry. So the auditor's annual report is effectively a consolidation of these three reports. So it's yet another summary of the conclusions and the risks that we've got. So it will be entirely consistent with the messaging that we've given you in this committee.
Comment if I might. Page 258, there's also corrected audit misstatements where it refers to pensions to be updated. Has that been updated now? Can that be clarified?
Yeah, I'll come on to that. Am I okay to come on to that as we go through the subsequent reports? Okay. Now, I appreciate it is a little. It feels like that we're putting a lot of information that sounds like it's semi-complete in front of you, but the work is complete on all of these areas. The second report that you've got within the pack here is our. Sorry, just bear with me. Find the pack. Is our ISA, we call it our ISA 260, but it's our year-end report on the financial statements and the value for money. So effectively what this report does is bring together for management our findings, our progress against the financial statements audit work, the conclusions that we've made, the work that we've done against risks that have previously been discussed within this committee, and it makes recommendations not just in terms of the financial statements, but also in terms of value for money. So just to start off with, in terms of the status of the audit, so we will be using the backstop date process to issue the opinions on the financial statements, which will effectively draw a line under the 23-24 audit process. We'll be issuing disclaimer audit opinions because we've been unable to obtain sufficient appropriate audit evidence over a number of areas in the financial statements prior to the date that's been imposed upon us. So specifically over property, plant and equipment, some of the statement of comprehensive income balances, PFI and the reserves movements. And we've also been unable to obtain assurance over the comparative balances because of the fact that they were disclaimed previously. Clearly, where there's a movement, you need to have assurance over the opening position to be able to determine whether the movement is accurate or not. So we will issue disclaimer audit opinions on the financial statements, and I recognise that that sounds like we're not issuing an opinion. There will be an opinion within your financial statements that that sets out the wording that I've just discussed and described there. But what we've tried to do here in the ISA 260 document is set out the work that we've actually completed, because a huge amount of work has been completed during this audit process, and we've worked very closely with the finance team to try and reprioritise the audit process and to provide assurances over the balances within the accounts. And it's actually only, you know, it's probably a small element across probably quite a few balances where evidence is missing, but we've equally set out some of the challenges that we've had within the process within this document. So Rob will take you through from that perspective, and then I'll come back again on the pension fund report, if that's okay.
Thanks, Rick. Yes, I think Rick has given a useful overview of where we are in the context around that statutory backstop and the disclaimer opinion. So page 231 of the pack of our report sort of gives that overview and sort of detail around what we have completed and what we haven't completed. Page 6, 232 of the pack, then talks about some of the challenges that we faced. And they were predominantly around the sort of transaction listings and being able to sort of get them into a position that could be sampled from. As you can imagine, the size of those listings is quite significant, so significant that it requires the Capita, who's the third-party host of My Finance system, to download the information for us, and to then for them to reconcile back to the accounts. So immediately there's that real challenge there in terms of being able to, for management to be able to easily provide us with listings for us to then sample, and that took a huge amount of time and is cause for part of the delay and why we haven't been able to complete certain elements of our work. The second reason is around the sort of the quality of evidence. I have tried to stress in the report about the finance team were very engaged in this process, and they did seek to find queries for us. But as you can imagine, when you've got asking for particular samples across the council, you're reaching out to services, and they themselves got to provide the evidence to support those transactions. And the quality of some of that evidence that came back wasn't sufficient for our purposes. So there's a bit of a training sort of element there that we need to sort of go through, and we will consult closely with finance, with Rachel and her team, about how we can get better evidence. There's a specific example around sort of care director expenditure. Hopefully familiar that the huge amount of social care costs coming out of the council, a lot of information is held within that system, but we can't rely on what's in that system. We need to see sort of third-party corroborative evidence to really sort of support the underlying transactions that we sample, and that wasn't always easily attainable. So again, we've got a bit of work to do there to make sure we're comfortable with getting that evidence for our work. So page 2.3 of the pack in terms gives a summary of where we got to in terms of our significant risks. So they were the valuation of land and buildings, and we didn't conclude on that area due to the backstop date. The pension work is very close to conclusion now. There's a small query that we're still just trying to work through, but the majority of that work is complete. We did identify an adjustment, which I can talk through in a moment, but that red text will disappear in the next day, and we will be able to conclude on that area. If I just then touch the IC60 event to draw out the work we've done on our significant risks specifically, and so we've tried to give a bit of an overview of what we did manage to complete with respect to valuation of land and buildings and what we didn't. From the valuation of the pension, the post-retirement benefit obligations, there was quite a significant adjustment identified, an error on the fund actuary part, where they've sort of misinterpreted what we call the rates and adjustment certificate, which resulted in quite significant adjustments to the financial statements that's included in a later appendix. And then there's some red text there that again links back to that small query outstanding. In terms of other elements to draw out from this report, I think we do then touch on the value for money, and you'll note that that significant risk assessment on page 243 is consistent with the report that Rick just shared. And then, so these pages were then meant to sort of display exactly what we've done over those risks. So that work is now complete. It's obviously showing red at the time that we sent that these reports were finalised last Monday. They were outstanding, but these are now concluded. And as Rick referred to, they're with management for comment in terms of just responding to the one recommendation that we've identified. And that recommendation centres around the work. Let me just get it, because I've got it written down here in the report that we've shared. So we obviously focused quite significantly on what management had done in response to the Ofsted recommendations that were received in draft form in November 23. They obviously went to Cabinet in the final report in January 24. So we've just been looking at how the council responded in that period. And as I say, the arrangements were proportionate, and we were satisfied that the immediate action plan that was produced did look to try and address some of the immediate concerns. That action plan was a sort of informal operational plan, has now been developed into a more sort of formalised ILACS improvement plan that has been sent to Ofsted. And so the work we do for the next financial year will be about, well, the action plan is now in place, what oversight is there, how effective has the authority been in terms of implementing those actions. But at the point of determining our opinion, the facts are that the authority went from being good to requires improvement to be good, and we basically just determined that was indicative of a significant weakness. And that's what we will report, and our recommendation will form, we will basically just stress the fact that we expect that any actions are sort of realistic in terms of being measurable and realistic, and also that there's appropriate oversight for that implementation. So I don't think management will have any sort of concerns in terms of how they respond to that. The arrangements are in place. That's obviously all. The oversight is obviously through predominantly the safeguarding, through the improvement boards, and then safeguarding and education oversight committee. So I'm sure we'll get a response quite quickly on that. And as Richard alluded to, we will document those findings and the response to that recommendation in our auditor's annual report, and obviously update this ISA 260 as well. The pages will actually just be duplications of each other. So I think that's all I wanted to draw out. Oh, sorry. There are then recommendations in the ISA 260. Forgive me, let me just find the page number for you. They're in one of the appendices at the back. So there are a number of control recommendations there. It's probably worth stressing to members that these are quite auditing standards specific, and you'll see from the management responses that the risk that they're effectively accepting of the risk that you associate with these findings. So it's about, in terms of reviewing actuarial assumptions, reviewing management, reviewing the valuation of the land and building assumptions. Management, like any entity, rely on the experts to provide this information. That they don't have the in-house expertise to provide, thresholds or sort of predictable type of expectations on what those assumptions would be. They rely on the experts, and that's fine. But from an auditing standards perspective, the idea is that you expect management to sort of be able to create their own expectation, which you then compare to what the expert has given. Recommendation 2 on page 260 does then sort of draw out some of the challenges that we had in terms of the quality and timeliness of the evidence. So it's just to stress the management that you know, that we'd want to see improvement there if we're going to ensure we get much closer to completion for the 24-25 accounts, and management have responded accepting that. But yeah, I think that's probably it then in terms of our findings, and I'll pause there if anybody wants to ask any questions on what I've just discussed.
Thanks, Chair. In terms of some of the descriptions that you've given there with regards to the quality and timeliness, just picking that one up first, is that something that you would typically expect when you are having the new process established, would be my first question.
Yeah, absolutely. I think I think the point is drawn out as well in the response. The finance team haven't necessarily had a full audit for 2 years really, so they're having to sort of refamiliarise themselves with what are the requirements. And indeed, being new auditors, we have our own sort of expectation threshold of what we expect to see. And again, there's that education around educating those in the services to establish what good evidence looks like. So I think, and we've had sort of informal debriefs about this, you'll hopefully see that they know the sort of things we want, and they're sort of then better equipped from a starting point for next year. So I think we're in a good position, or certainly in a better position to make sure that process is a lot smoother for next year.
And I suppose the follow-up question would be from the officers as well, to see the level of engagement that's been taking place, because I think knowing where we've come from, and in terms of the delays in being able to present information at times, is making sure that that information is suitably resourced for yourselves to be able to respond once we've ascertained the level of detail that's required in those. So if I could ask the question of officers then.
Yes, and I think because this has been the first year, obviously there's a period of getting to know each other, so every auditor has slightly different requirements, and so Rob's quite correct there. We needed to get to know what KPMG want to see in terms of good evidence, and we know that now. So I think he's quite right that I feel quite confident that moving forward to next year, we know what their requirements are and the timeliness requirements, and so we can make our internal improvements in order to reach those deadlines and get that evidence to the team much more quickly.
Thank you, Chair. I mean, my question was really the same as Janice's there about the delays, but the second part of the recommendation there is about the care director system and being able to get the information from that system. Is that also going to be addressed for next year?
Yeah, so that again sort of falls back to my previous answer. We need to work internally with our colleagues. So a lot of that evidence was not obviously held in the finance team. It was held by the service itself. I think, unfortunately, the timing of some of the requests corresponded with a particular inspection for them on at a service level, and that didn't help matters. But again, we know what's required now, so we can take that forward and work with those colleagues in the service to ensure the evidence is there for next time.
Thank you.
Robert referred us to page 260, and I've just noticed an expression that I've not seen before, which I wanted to challenge. In line 3 there on the management response section, it said, due to the national audit backlog. I wasn't aware of a national audit backlog. I know we've had a backlog in terms of our own accounts. Is there a wider backlog than just KPMG's delays the last couple of years?
Yes, is the answer. So this is our first year that we've been auditors of the council. It's our first year that we've actually been auditing local authorities after having been away from the market for a period of 5 years. But in that period, that there has been major delays across the vast majority of local authorities. I think there was a statistic in Public Finance magazine. I think it's... Say that again, sorry. Yeah, I think it's more than that, that have not had audits signed off that are up to date. So they've introduced this backstop process, which is described, I think, in the report, a series of dates now that will be effectively a cut-off. So you do as much audit work as you could possibly can up until the backstop date, and then that's when you stop. And it's effectively that's preventing us to carry. You know, we would carry on with this audit. We're probably within touching distance on quite a few areas to allow us to conclude the audit process, but we have to finish, because if we don't finish now, it will jeopardise the 24-25 process and bringing us back into an even keel. But to answer your question, it's a national issue. And just to build on one of the points that the previous member said, it's unfortunate that it is our experience that councils have challenges in terms of the provision of information, and that the audit process that is our experience. But I think, you know, we're committed from an audit side of things, and I know finance are, to try and get us back into this position. But it is quite a steep learning curve. So the demands of audit have changed over the past few years, but you know, we really do need to get to a position where we're, you know, concluding audits September, October time of the year. So, you know, ideally we'd want to be signing these off in September, October 2025 for the March 25 year end. Now that's probably unlikely to happen for some time, and the accounts will continue to be disclaimed for quite a few years by virtue of the fact that we've not got assurances over those opening balances, and that has to work its way through.
Thank you, Chair. Rob and Rick, thank you. Really two good reports. So a good sign of things to come in our relationship working with you. Thank you for that. I think members would be interested to know if the challenges and weaknesses that you identified that resulted in the disclaimer are peculiar to us as a local authority, or they are widespread. How do we measure against comparable local authorities?
The signing off or concluding of audits via the backstop process is widespread, but some of the issues that we've experienced at Staffordshire are specific to the authority, and that's, you know, that's being completely honest in terms of the way that you have a third party that you rely on to get some of the breakdowns and the reporting. We have been able to move a number of our authorities from a position where they were disclaimed because work wasn't complete to being disclaimed by virtue of the fact that we did the full audit for the year before the backstop date. So I think there's probably a combination. There's probably some specific reasons, and we've written this commentary in here very much about Staffordshire. It's not generic, so it's the experience that we've had to perform the audit. But in terms of the driver for those issues, I think they are very common across the sector.
Can I just add, yeah, I think in terms of the quality of evidence, I think that is probably the most widespread challenge that you have across most local government entities. I think the issue with the ledger is quite specific to Staffordshire. Sorry if I feel like I'm repeating what Richard said, but I think that's the one that is quite specific to this authority. But I know isn't there an appetite to move ledger at some point in the future? Or am I speaking out of turn there? I know we've had that discussion.
Yes, so we are aware, obviously, of the limitations with the current general ledger system that we use. We've obviously had a number of discussions with Rob and the team around that and tried to identify a way forward. And, you know, we have had this system for a number of years, so it's not, you know, beyond the realms of possibility that it may change.
Thank you. Just one last one. Savings and transformation plans is one area where most organizations struggle. How do ours look like to you? First glance as new auditors coming in.
Well, we don't, it's not within our remit to kind of do a comparison of kind of like authority to authority. We're reporting very specifically on our responsibilities, but within the value for money section on financial sustainability, we do look at the what called value for money profiles, which compare your nearest neighbours and similar authorities' performance, and we've looked at a number of those VFM profiles to determine that conclusion. So things like minimum reserve balances, or I think there's a section that will be in the Audit annual report which provides a bit more commentary around that, which says we haven't identified anything that gives rise to us reporting a significant weakness, and that's as far as we go in terms of like our commentary on comparing with other bodies.
Thank you, Chair.
Thank you, Chairman. Thank you for this report. For many, many months, maybe even years, I felt very uncomfortable with EY, and the disclaimed opinion which we expected that they gave as well, again made me feel slightly uncomfortable. Your report has made me feel really settled, and so I've actually read this and felt, oh, we're on the right track again now. And the challenges you've thrown back to our officers, I just love. Keep up the good work, is all I'm going to say.
We have got one more report, which is the Pension Fund report in this pack, if you'd like me to take you through that as well. So, good news on the Pension Fund. We are completely up to date on the audit of the Pension Fund. So the report that you've got here, it's a strange one. The Pension Fund accounts, you've heard already from Rachel, go in the same document as the authorities' accounts. So we've got, obviously, the issues we've discussed on the authority side, but the fund numbers we've fully audited, and we are in a position where, alongside disclaiming the fund, authority accounts, we will issue a full audit opinion on the pension fund, hopefully on Friday or before Friday. So the report that you've got here has already been through the pensions committee. That went through on the 20th of December. So they've discussed a version of this that was as at that point in time. The only changes that have happened to this report since then is to just strike down some of the points which were on the outstanding list at the end of December. But so I will canter through this at a reasonable pace if that's okay, and please ask questions as we go along. But as I said, this is the conclusion report for the pension fund. It basically sets out that we'll issue an unqualified opinion on the pension fund accounts. It also provides the response to each of the risks that we identified in the audit plan that came through this committee previously. And we had two significant risks, which were management override of control, which is a standard risk across all audits, and we had valuation of directly held property. There was another number of other audit risks which we were required to consider, but they weren't deemed to be significant. So we've provided a commentary against each of those risk areas in our response, which demonstrates that we're satisfied with that the balances in the accounts are fairly stated, and that covers the bulk of the report. The other elements that are required to be covered by this report are to confirm our independence from the Council and the Pension Fund, and also to set out a number of mandatory communications that we have to issue at the end of every audit, which is set out on page 284 or 18 of our report. Previously, a member mentioned about a corrected audit misstatement, so we have got one a monetary adjustment to the accounts which has been made, which is quite a big number, but the numbers in the pension fund accounts are massive, so from that perspective it stands out, but I think it's important that it's set in the context of that, and it's purely just a timing difference. So when management pulled together the accounts, they made an estimate of the valuation of some investments, and given the fact that time's moved on and they know the actual number, we've asked them to update the accounts for the actual position which has been corrected in the financial statements. Inevitably, there's a number of other presentational changes that we make as we go through an audit, and they've been corrected as well. We've identified 6 recommendations which are set out in the appendix, starting on page 22 or 288 of the pack. I'm going to categorise those in the same way Rob did. A few of them relate to our interpretation of auditing standards and the information that we would expect to be in place around those. So the level of detail of review, the level of documentation around decision making and challenge, that type of thing. It's not to say that those processes haven't happened, but it's just around the level of detail that you can present to us to allow these points to disappear. Realistically, I would expect those certainly recommendations 1 and 2 to recur in future periods, because there's a very high bar being set by the standards. The remainder also fall into the category of kind of documenting what you do, or you know, what the processes and the practices that are done. For example, evidence of review of financial statements. We know that they are reviewed in detail before they're put forward to committee, but we can't see that that's taken place. You know, so a simple sheet of recording, you know, could easily make those recommendations being implemented. Management provided a response to each of those, which you can see in the pack. I think they're proportionate. So that's all I was going to say on the pension fund, ISA 260, unless you have any questions.
Richard and Robert, thank you. Richard?
Thank you. Very good comprehensive report, that, and I think it's says what it says on the tin, and it's good. I'm going to be naughty in one respect now in trying to understand what comes next, and I know that obviously audit is looking at the past, but we also have to recognise the future. And we've obviously got a big black cloud hanging over us in terms of devolution. Do you see the existing pensions fund under threat in terms of losing what is rightfully Staffordshire Pension Fund? I know that sounds probably a naive question for today.
It's probably not a question I can answer either, in terms of I don't have a particular. I'm not well enough informed on the future of devolution and what the impacts might be. What I can say is that obviously a set of accounts looks backwards, but there is also commentary in the front end of the financial statements which talks about future risks and opportunities and you know, strategic forward-looking commentary, and we're satisfied that you know is compliant.
I just wanted to say thank you, and I'm sorry that it was a naughty question.
Can I attempt to answer Councillor Cox's question? As a member of the Pensions Committee, he's also been the chairman of the Pensions Committee. The £7.5 billion amount is not owned by Staffordshire County Council. It is the combined effort of a number of thousands of entrants in hundreds of employers. So, for instance, it's made up of Stoke City, it's made up of Staffordshire County Council, it's made up of all the boroughs and districts, a lot of academies and many parishes. So it's not there to be owned by the County Council. And in terms of devolution, it would be very easy to devolve the Pensions Committee because it's already devolved. It's a number of separate accounts. We always quote it as being one figure, which is the amalgam of all these different amounts. But each of the schemes has got its own contribution level. It's got its own ability to try and match income and expenditure. And some are in profit and some are in deficit. So the devolution aspect is completely irrelevant, because all that would happen is if, for instance, Stoke went off with Cheshire, they would put their pension plans together, as an example. But yeah, everybody's pension plans is safe, and that's one of the things that from Maxwell onwards has been the case. It doesn't belong to the employer, it belongs to the pension plan members. So there is no danger from devolution.
I want to thank you, Councillor Greatrix, for that clarification. As I said, it was naughty and naive, but I'm more clearer on it, but felt that it was an appropriate question, but you've explained it extremely eloquently and understandable, so thank you for that.
Yeah, back on the report. Back on the report quickly. So for me, I thought the presentation of this was really helpful to be able to get the information that we need. You can see where there's a significant risk, and then it's got our response, our findings for the majority of them, or it redirects to elsewhere in the report where there's a lot more detail that's being contained, which I think is helpful. You sort of hinted at the continuity of making sure how we focus on these going forwards. I think it might just be helpful just to give a bit more detail of being able to explain how we can maintain the focus as we go through. I think that's the essence of the original question that I got, to be honest, is on that continuity.
Thank you, Robert. So we'll move to the next agenda item, shall we? That's over to you, Debbie, I believe. Agenda item 10.
Thank you, Chair. Great, thank you. So this gives members a more detailed update on changes to the internal audit standards. So this time last year, I reported to the committee that the internal audit standards were changing. So in January 2024, the IIA published new global internal audit standards, and it gave organisations one whole year to put those standards in place. So the global internal audit standards, they sort of guide the professional practice of internal audit literally across the globe. There's 5 domains, from purpose of internal audit, ethics and professionalism, governing the internal audit function, managing the internal audit function, and also performing internal audit services. And there's 15 guiding principles. Some of those principles have requirements, some of them are just considerations, and also there's further guidance on how we demonstrate conformance with the standards going forward. In terms of how that affects local government internal audit, well, SIPFA are our standard setters, and via the Internal Audit Standards Advisory Board, who consulted on the standards, it was agreed that the standards were applicable and should be applied in local government. To assist us, SIPFA relatively recently developed and published an application note similar to the old public sector internal audit standards, and the global internal audit standards combined with the application note going forward are called the global internal audit standards in the UK public sector. So going forward throughout 25-26, you'll probably hear me talk about these global standards in the UK public sector. And the application note also comes into force from the 1st of April. We're currently doing a gap analysis, and because we were largely conformant with the public sector internal audit standards, there's nothing of major concern actually, and it does seem to be minor sort of tweaks and more explicit reference to certain things, and I'll explain that in a moment or two. So one of the more sort of notable changes, and again you'll see this change in April when we bring the audit strategy and plan paper and also the charter to this committee, is there is a need for a mandate for internal audit. You probably won't remember what's in the internal audit charter, but I do refer to the purpose of internal audit and the authority. The authority is the mandate. So again, it's just making more explicit reference to the new standards and using different terminology, but you'll see that when the charter is presented to you in April. Also, one of the global internal audit standards refers to the audit strategy. As I've just referred to, we do present an audit strategy to this committee as part of the sign-off of the audit plan, and again we're just checking just to make sure that we've got all the required details in the strategy ready for when we bring this to you in April. Also, the standards, the old standards around ethics and professionalism has also been expanded to include professional courage and professional scepticism. And we've already undertaken some training, and we've used a bit of podcast technology to enlighten the audit team in relation to that training around this standard. And finally, in terms of our internal audit plans, they're supposed to support the achievement of the organisational objectives. And again, when we present the plan to the committee in April, you will see that part of our, and sort of hard-coded into our risk assessment methodology, we already have links to strategic objectives of the council as part of identifying what audits we want to undertake during the course of the year. So we already have these, largely all these things in place. So what does the Audit Committee need to look out for going forward? Well, you'll start to hear me talk about the Global Internal Audit Standards quite a lot. And again, as mentioned, you'll see that the Charter will be tweaked slightly to refer to different terminology. And you'll see that as we go throughout the year. So does the Audit Committee need to change in any way? Well, again, CIPFA have been very helpful. They have produced a code of practice for governance of internal audit to assist with compliance with domain 3 of the Global Internal Audit Standards. That has very recently been produced on the 6th of February 2025, and it covers 3 main provisions around providing authority for internal audit, positioning internal audit independently, and also the oversight of internal audit. And this really covers largely the Audit Committee's role in relation to interactions with internal audit, and also having that level of oversight in terms of the quality of audit, getting involved in the external quality assessments, and also understanding and having oversight around what our coverage is for the year and our resources. And again, hopefully some of that resonates with you already, that you see year on year. So going forward as well, the code of practice will feed into Lisa's annual governance statement, because we'll have to refer to that as part of Lisa's work. And as part of the overall consultations on all these codes and standards, I have been involved in various webinars and also the consultation process as a group, as part of our Midland Counties group, and also individually. So, Chair, just happy to take any questions in relation to any of that.
David?
Thank you. It's more a comment than a question. This looks to be a very good paper, and you look to be in a very good position to meet the CIPFA requirements. I mean, you didn't mention the CIPFA did issue a time frame for implementing the actions, and that included getting the mandate, the strategy and the charter to audit committees around about March, April time, which is what you're doing. So everything looks, to me, looks good. It looks like you're going to be compliant with the new standards and are in a good place. So, thank you.
You know, I often wonder with a new policy coming in, what the changes are and what was in need of correction. I can't see a great deal here that does involve a change. I can recognise the mandate being a document that people can salute and recognise as important. The thing that I drew my attention most was the professional scepticism, professional ethics. So I'm wondering if there's something that was fundamentally wrong before, that maybe there's a correction here, that we weren't sceptical enough about things or weren't doing the right things. I always think if it doesn't necessarily affect this authority, there's somewhere else in the country that's been going wrong.
Do you want to?
Do you want to go? Do you want to come back?
Just wanted to come back. I don't think there's anything wrong. I think there's just some further guidance around just critically assessing sort of the reliability of information that comes our way, so that we sort of have an informed view and get a judgment. So I think it's about evidencing that sort of critical assessment.
I do wonder about these changes. It seems something and nothing to me personally. Well, that's my personal opinion. But we've got to note that we've got to note the change. If members are happy to note that.
We note.
Well and truly noted. Agenda item 11. Change to the Constitution, Chris, over to you.
Very few changes.
Okay, to begin? Thank you. Thank you, members. So members will recall of this committee before Christmas to form a working group to review the Constitution. It's recognised as general best practice to thoroughly review the Constitution, and we do that on a 4-yearly cycle. But obviously, we review it as and when throughout the year should any changes arise. So what's happened since? The members of the working group met and were presented with what you see in front of you today in the pack, which is the thorough review of the Constitution. On the whole, the Constitution is fit for purpose, and what you see in front of you today are the changes which are largely academic in nature, such as changes to job titles and various terminology. Overall, sort of a move to sort of more sort of clarity and brevity throughout as well. Members will see that the largest area of changes is within Section 7, and that's surrounding overview and scrutiny. And that's really sort of picking up sort of the practice that's been adopted throughout the Council over the last 4 years in terms of overview and scrutiny, so these changes reflect that practice. The next steps, should members be in agreement to approve these changes, they would then go to full council on the 13th of March for adoption. So therefore, Chairman, I recommend that the changes are reviewed by the committee today and then consider their adoption ahead of council, as I say, in March of this year. Thank you.
Thank you, Chris. Are there any questions to Chris? No, we're all happy with you then, Chris. Carry on the good work.
Thank you, Chair. Excuse me. It's the updated forward plan that's before you for approval, and to note the items that will come forward on the agendas for the 2 remaining committees of this particular civic year. You will also note that a couple of items that you've requested to come back to the committee will also be included relating to SEND. Well, mainly SEND, actually, SEND transformation, and then a review of the process that was asked the last time that Halleck came to the committee to update you regarding his progress on his recommendations. So happy to take any questions or any comments regarding the proposed agendas for the next 2 meetings.
Could be the end of the road for some of us, I suppose.
Thank you.
Any questions for... I think it's a pretty comprehensive forward plan, actually, so I've certainly got no questions. So thanks for all the work you do. We've got a good team at Staffordshire, so long may it continue. Thank you. Right, that brings us to the exclusion of the public. So I'd like to read this out. That the public be excluded from the meeting for the following items of business which involve the likely disclosure of exempt information as defined in the paragraphs of Part 1 of Schedule 12A as amended of the Local Government Act 1972 as indicated below. I'll just pause there. If members want to get themselves a cup of tea or something.